Hello, fellow dividend investor. Day 12 of our investing plan. Please subscribe, like, leave comments, hit the bell button to support me in my dividend investing journey. The next stock on our screener we will buy is O. O is the ticker for Realty Income, which has a tagline, the monthly dividend company. Because of this, it's not surprising that Realty Income tops a lot of dividend investing tip lists, as you can find a lot of YouTubers praising the stock. Our screener also ranks Realty Income very highly with a yield of almost 5%. Combine this with the historical dividend growth and the potential upside, uh, you will probably earn back your investment in 15 years at the current rates. Rule number one of our dividend investing plan is buying small chunks of stock every day. We are investing $50 every day, and so Realty Income is the next position we add to our portfolio for a value of about $50, which will buy us just one share. And since we are using a broker with no fees, we can praise ourselves lucky we can buy in such small and fractional amounts. It just makes it very fun to buy a stock every day. Realty Income is the second real estate investment trust we add to our portfolio. It is a net lease real estate investment trust. This means that it owns properties, but its tenants are responsible for most of the operating expenses of the properties they rent. Realty Income is known and loved for their monthly dividend payouts. If you want real passive income, this stock will provide you with regular payouts. The income is even part of the company's name. Realty Income has a very sizable real estate portfolio with over 6,000 properties. On their investor page, Realty Income Corporation highly emphasizes its growing dividend and history of raising payouts. It also boasts an example where an investor who bought Realty Income earned back 88% of the investment since 2009. The only risk is the recent pandemic. How hard will it affect Realty Income? Luckily for us, Realty Income focuses mostly on convenience stores, dollar stores, and drug stores, and those have the biggest chunk in their real estate portfolio. Because of this, we can assume that the company will have limited impact from the pandemic since those types of shops are still open. Time to take a look at Realty Income's fundamentals. As you can see, in the past 5 years, it raised its dividend from 19 cents to just a little above 23 cents, paying monthly. So it will probably be the first dividend we will receive in our brokerage account. The only thing that bothers me is the high PE ratio. It's above 40, and compared to the other real estate trust we bought, it's about 4 times as high. The debt to equity ratio is quite good at 0.82. The company is also making enough profit so then they can sustain the dividend yields. So it makes very much sense that other dividend investors are buying the stock. It seems to be a very safe stock, but you should always diversify. That's why we buy almost 20 stocks every month. Time to take a quick look at our portfolio. So here we have calculated the current yield, and we already deducted the taxes. I'll be paying about 30% because I live in a socialist communist country named Belgium, but that will still bring me 32 US dollars a year, and with the portfolio costs of $615, so that's what I paid. The current value after 12 days of investing is $646, so that's also a nice capital gain of 5%. So I would expect when the stocks will pay out the dividend, they will lose the gained 5%. So my portfolio will stay at the same amount, but I'll have $32 on my bank account. As you can see, we have two stocks that have a larger part of the pie. That was because we weren't able to buy less than that amount at our broker. They don't allow buying fractional shares for every stock on the US stock market. Here you can see the gains per position. Almost all positions are in green, with the greatest outlier being MLPX with 34% capital gain, and it will probably pay out um, about 21%. A very risky one, but it seems for now that I have been rewarded for it. Second one is EPD, which is like MPLX, an oil and gas stock. Um, Also great gains, but also very risky. And we have Pfizer, Pembina, Merck, AbbVie. Um, the pharmaceutical stocks are doing pretty well. And then the REIT Welltower, which is also doing quite well for now. Um, I have three stocks currently at the losing side. So AT&T, uh, Tyson Foods, and Realty Income. But that's just probably because I bought it today, and the zero transaction cost is not really zero transaction because I pay a spread. So you can see the historical transaction, the broker I used, the amount, the position. So yeah, looking forward to completing this journey. Um, I'm also thinking of maybe raising the $50, but for now I'll limit the amount I put in, since I'm also investing for retirement in European retirement plans. So this is for now the best I can do in this dividend investing game. Thank you for listening, and since you've been listening all the way here, please like and subscribe. Thank you very much.